So speaking of tokens, our next panel is dubbed "The Revolution Will Be Tokenized," because many of the STOers, so they're called, believe that it's not just another investment tool or a crypto buzzword, but that it's a true revolution in the financial world. The group of panelists, led by Ziv Keinan, will review the applications of this new asset class and will try to predict where the industry is going. Ziv, please.
Thank you all for joining. We have a wonderful panel today with wonderful people, all really knowledgeable about the trading of securities and the token market. We're here to discuss a really interesting concept of security token, which lately has been emerging. Basically, we have exchange, people which are experts on exchange. We have Ami Ben David from Onera Networks, and I'll just let the speakers introduce themselves shortly. Before that, just to say, my name is Ziv Keinan. I'm a lawyer, and I'm very active in this space, basically with all the participants in this panel. So let's start with you, Marlene.
I was afraid so that you would start with me. Thank you, Ziv. My name is Marlene Everts. I am the co-founder and CEO of NExchange. NExchange is a fully regulated tokenized securities exchange. We're situated in the Netherlands, so we're regulated by the Dutch authorities of financial markets and the Dutch Ministry of Finance. We have an extensive background in trading and digitized assets. We do that for over 10 years. And NExchange now, since 2016, got their first permits. And yeah, we're basically building the marketplace at the moment, collaborating a lot.
That's amazing, yeah. Iqbal.
Thank you. My name's Iqbal Gandham. I'm the managing director of eToro, a multi-asset platform. We've been around since 2007. One of the asset classes that we trade, obviously cryptos, otherwise I wouldn't be sitting here. We're regulated in Europe, and we're also regulated here in the UK under the FCA.
Thank you.
So hi everyone, I'm Graham. I'm CEO, co-founder of Archax. So we're building a digital securities exchange here in London. Spent the last 20 years working for hedge funds, most recently as a COO and Chief Compliance Officer of Omni Partners here in London.
Hi, my name is Ami. My connection here is 2.5 years ago, I launched the world's first regulation-compliant security token for a VC fund that I co-founded. And since then, I invested in space in several companies and built some platforms and protocols. Now I'm working on Onera, which is an institutional-grade digital securities network designed for basically to bring security token to the institutional market, where all the nodes are regulated financial institutions.
Wonderful. I have a question basically for each one of you, but I really encourage you to to have a discussion on those subjects that I'm going to ask. And my first question here is for you, Graham, about, I want to touch the concept of securities token. So in your mind, what is basically the killer application of securities token? And I want you, and maybe, well, you can help us with that, understand perhaps what are the implications here in the British economy and where it could go or assist.
Sure. So I guess I'll come back to the UK bit and just starting on the digital securities themselves. And I guess for the last 2 years we've been building Archax. We've been looking at what are the blockchain advantages to financial services and what are the true advantages compared to what people talk about. And we've really split it up into 2 areas. There's the instruments themselves, the digital securities, and then the infrastructure. And looking at the instruments themselves, I think a lot of people stood up and took attention when utility tokens and cryptocurrencies started to take off. And a lot of good things came out of that, and some bad things as well. But some of the good things that came out of that was that we kind of realized that companies wanted to go to market and raise capital more easily. We wanted to remove the intermediaries, give people access to the market. And on the flip side, you had investors that wanted to participate in these projects and try and earn money and hopefully learn a bit about the projects as well. And when the dust has settled, I guess ultimately there's a lot of projects there that have no value because They're giving away discounts, products, services, dreams that people didn't really own a stake in. And as a result of that, they're hugely volatile, no real value underpinning the price. But behind all this, you had some people that were giving away equity and debt on the blockchain. And some of them promoted that in the right way and some did it in the wrong way. But fundamentally, the idea of raising money with a blockchain token appealed to a lot of people. And I think, obviously raising money was a lot of their influence, but aside from that, there's a lot of advantages to having a security on a blockchain, such as corporate actions, voting, understanding your cap table. There's some great advantages when you introduce a stablecoin to that as well. And then kind of running alongside all of this, you've got the infrastructure as well. So blockchain in itself, being used as a technology to improve the existing financial services infrastructure. And when we were here a year ago, there weren't that many companies talking about it, but now, LSE, DTCC, Euroclear, SIX, they're all talking about building the rails on digital. So what you have now is a situation where it makes more sense to have securities on-chain, and the fundamental underpinning infrastructure is being changed to facilitate that as well. So you're kind of combining a perfect situation for financial services to move in that direction. And I guess, one of the big misunderstandings that we have is everyone kind of comes to us and says, what appeal is there for digital securities? Why will people take place in a security token offering? And that's because everyone's focusing on this illiquid end of the spectrum. And a lot of people are going to that illiquid end because that's a market that's been hugely inefficient and not accessible before. But actually the appeal exists throughout that liquidity spectrum. So all the illiquid assets, all the way up to the liquid blue chips, which is the reason LSE, DTCC, Euroclear are looking there as well. So, will people buy security tokens? Absolutely. They're just securities on a more efficient technology. It's also making that illiquid end more efficient as well. And in terms of the UK, I'm totally biased.
Actually, I would like to ask Iqbal. Can you give us your point of view on that in terms of the UK?
Yeah, so the easy answer is that I can pick any random number, add the word trillion to it, and saying that's how big the market is. It's very difficult, I think, to say how big the market is going to be here in the UK. We can say, well, if we open up the market and have 24-hour access, increase liquidity, bring more people into it, it's a big market. That's the only thing I can really say. Now, I think the difficulty is that in the security token space, we haven't really identified who our customer is. On one hand, there's a lot of platforms being built for institutions to improve their settlement speeds, reduce costs, et cetera, et cetera. On the other hand, we want to get people like my sister buying property or tokenized property in China using the blockchain. So I think you have to be very clear who our customers is when we're having a discussion about security tokens, because if we look at the retail customer, is it really going to make it easy for them? Are they really going to buy property in places like Venezuela without having a lawyer's stamp of approval? Are they going to trust the blockchain? Or do they still need an intermediary to give them that level of trust? And I would say today they do. Whereas from an institutional perspective, yes, I think there's a lot of benefits that security tokens, even in the form they are today, can offer. So in terms of markets, two different markets. Institutions is there today. The retail market, which is the $1 trillion market, I think is going to take time to develop.
Okay, thank you. I think it's a good segue to my next question. This is a question for you, Ami. We've seen a lot of interest from the institutional side. We've seen issuance by banks, TES, POCs, Société Générale, SIX Exchange. We've seen some interest in this space. So what do you think about what is missing? What is the missing piece in order to bring institutional to this market, to board them on this market?
The way that I saw it, initially when we started doing STOs and security token offering, it was almost a continuation of the ICOs that came before, because that's where the technology came from. So it went retail and it went on crypto networks. So about a year ago, I came out in a big conference and basically said that I think we're all going in the wrong direction. It's not even interesting to go to retail first. It will take some time before we can go to retail with digital securities. The vast majority of assets that are suitable for digitization are basically private assets, and they are large private assets. And today, every transaction can take weeks and cost a lot of money with lawyers, and with digital securities, we can bring it to zero cost effectively per transaction and to instant settlement. So the value here is taking something analog and bringing it to digital. but it's definitely an institutional market because a lot of these assets are only suitable for accredited investors in the US, qualified investors here. These are sophisticated products. So we have to go to institutions first. And institutions cannot actually operate in a market where, first of all, the blockchains are tainted, like some of the networks like Ethereum and so on was not designed to be a regulated platform. It's there's some problems with anonymity, problems with regulation. There was a lot of scams on it. Institutions can't go near those networks. So that was one technical problem that we saw. And the idea was if we want to go and actually get institutions involved, we have to build infrastructure that is institutional grade, that is suitable for institutions. And I think that's what's being built right now, because what I'm doing now is I'm speaking to all the banks, exchanges all over the world, and I'm hearing the same thing from everybody. Digital securities are coming, it's clear, it's happening. Some people say it's like a done deal, the train has already left the station. But on the other hand, the infrastructure is not there, so nobody's actually already deployed anything real. So we have like this monster that's happening kind of behind the scene, almost kind of coming out, this Godzilla, but we can't still see it because it's now being built.
Do you feel that the fact that you established Onera was based on your previous experience as founder of one of the first tokenized VCs, and Securitized was actually involved? Did you see that? Is that a pain that you bring from your past in those companies?
Absolutely. Today there are about, when we started there were like 3 companies in the space. Today there are about 200 companies dealing with security tokens. So if you want to tokenize a business or equity or like a building, you can easily do this. You can go to one of these technology companies and they will tokenize your asset, and then you'll say, can you please distribute it? And they can't. They're not broker-dealers, they don't have the market. So distribution is missing, it's a big, big deal. So one of the ideas behind Onera was to create a network where all the nodes are all regulated financial institutions that can verify the assets that go on the network, that can verify that all the transactions are being done according to regulations, and can then turn around and distribute it to a pension fund. And a pension fund is much more likely to buy from a big bank or a big asset manager that actually can verify the asset and verify the transaction than they would from buying from any small company out there that is just a technology company and doesn't understand the fiduciary duties that needs to be captured. So I think this is the sort of infrastructure that is being built right now, and we will see the fruits of this in the beginning and middle of next year.
Interesting. Marlene, first of all, I would like for you to comment on what Ami has said. I'm really interested to learn what you think about the need to have a separate infrastructure for blockchain traded securities. And if you can continue and tell us a bit about more your work with an exchange. An exchange is a license exchange in the Netherlands, holding a MTF license, an advisory license. So if you could tell us more about the assets traded there and listed there and your plans.
As an exchange, we have a regulated market license and an MTF license, which is a similar license to all Dutch or all European exchanges, actually, such as Euronext, Deutsche Börse, any large exchange. And the way, the question is, what do we mean if we talk about tokenization? Is it cutting up an asset in multiple pieces? Well, we can already do that because of the securities law. So we don't necessarily need tokenization to be able to do that. However, if you look at the existing exchanges and how they are organized, if you look at the technology, it's ages old, and it's also very difficult to change to a new model, because if one changes, the whole chain needs to change. So if you would ask our regulator, the way our regulator at least looks at tokenized securities, we also intentionally call them tokenized securities because they are in fact securities, which we mean if we want to trade them and if we want to offer a market in it, we need to adhere to the regulation around securities. And they see the tokenization part purely as an infrastructural change. So then the next question that you need to ask yourself is, so why would you tokenize something? Why would you trade it on a decentralized platform? And there the settlement comes in, and also the applications that you can build on top of the exchange. So to give an example, we have tokenized our cash already on an exchange. Our cash is situated in ABN AMRO Clearing Bank. So every owner has their cash located in a bank, and through a blockchain, we basically can manage those cash positions of the owners to settle transactions. If it would be only us and ABN in that network, then we might as well set up an API between the two of us. But now the next thing is coming in. Recently Bucks, which is a larger CFD broker, is also connected on the same blockchain with ABN. And the next player is a very large broker. And if that happens, then you can get access to the cash portfolios, cash wallets, of all the people that are in this network. So that's the cash part, but if you then look at the securities part, it only makes sense to tokenize a security if you can move it around. And the securities law dictates that a security can only be traded on a regulated exchange, which means that it only makes sense to have a tokenized security if there's another regulated exchange that can trade that tokenized security. Well, that is coming up. We all know that that is happening, that an exchange will not be the only one, regulated exchange that can trade tokenized securities. So at the moment, we are in a project by tokenizing the securities, not on ourselves, but with Euroclear. So Euroclear is a CSD. It's by far the largest CSD in Europe. And in order to tokenize the securities, we need to tokenize the whole book. Otherwise, it doesn't make any sense. Then we still cannot move around the assets as we would like them to do. So I'm extremely enthusiastic of all the options from a technology point of view a tokenization process brings, in terms of, can we already securitize one building and offer it to a multiple of investors? We can already do that. We already do that with an exchange. And so that is, and it's evolving. And then following up to your comment is, yes, institutional money needs to be in, for sure. If the institutions can't move, then the market won't move. And they are heavily regulated. They need to adhere to the regulation. I think one of the key points is the custody of the tokens. And that's why we're so happy that Euroclear is taking this step. If you look at the assets we are currently listing, so we have created buckets, corporate funding, green securities, and real estate. The corporate funding, yeah, you can start with listing small companies, doing small IPOs, etc. But the green securities and the real estate, you're talking about significant volumes, like starting with 30, 40, maybe 100 million in value. And you cannot simply not place that only by a retail public. At least we haven't found the retail public list. You need to get the institutions in. So, and they are willing to, absolutely, if we can adhere to the permits and all the regulation around it.
So speaking about the retail public, Iqbal, you have on eToro about 12 million users on eToro platform. Do you see eToro platform in the future adopting securities token, perhaps even becoming a full-blown exchange?
Again, the easy answer is yes. So just to address the point here on the left, we keep talking about institutions. I can't think of a single example in the past 2 or 3 decades where incumbents have actually created or led innovation in any industry. It's come from outside the industry and outside the incumbents. So either there's going to be different entities who are going to lead this change in security tokens. I don't think it's going to be the traditional ones. For them, it's just a technology play. From a retail perspective, I think security tokens are all about liquefying investing. So today I can't spend my Facebook shares. Tomorrow I want to be able to spend the digital tokens, whatever they are. I'm not just saying whether they're Bitcoin or Ether or something, but if I could invest in a tokenized property in St. Petersburg, great, but I want to be able to spend that as well as and when I like. So if I walk into a shop, I want to take out my card and I want to say I want to spend that digital token. If I can do that, you will get more retail customers investing in assets which they hadn't ventured into before, because the assets such as property and wine and cars, etc., are very hard to liquefy, should I say. If we can do that, then we'll get the retail customers into security tokens, and that's what I think eToro should be looking at.
Interesting. Ami, do you want to comment on that?
Yeah, I think we're, I don't really see the use case for somebody to come in and pay for a coffee with their building tokens. It doesn't make sense to me.
I agree today.
Yeah, I mean, these are investments. And I think that my view is that tokenizing a security is just making it digital. As before it was, unless it's public, it's analog. It's on pieces of paper. So if you want to invest in a company today, then you have to sign papers. And if another investor comes in, they sign papers as well. And the mountain of papers is the ownership. It's very, very analog, okay? And when we're moving to digital, we're just turning it from something that is analog to something that can be moved in the electronic world. There's only upside to going digital. There's no downside at all to going from analog to digital. So the view that I have, the view that I think a lot of people in the institutional world share, is that all asset ownership will be digital eventually. Will it take 5 years, 10 years? It's a question. But I do make a clear distinction between the asset ownership and money, currency.
Well,
these two worlds are connected.
I kind of need to react to that, because currency is just the oil in our economic system. But every asset can be explained in a value, and we can take, for example, a euro or a dollar or Bitcoin as the value of an asset and express that asset in it. So I do like your comment. You might not want to trade a real estate share to buy your shoes in a store, but what it actually means is that your assets, your property, your ownership can reside in those classes where you want it to be, and when you want to swap it for something else, then you can make that switch. And if everything is securitized, then you actually can make that swap, and you can agree on a form of what the trade is and which kind of value it is expressed. But you don't I disagree that you necessarily need to go back to fiat currency. It's not necessary anymore.
I didn't go specifically to fiat. It could be a cryptocurrency. It could be a
cryptocurrency.
It could be actually digital coins will, especially stable currencies, will help a lot in the adoption of security tokens. I'm just saying that there's a separation between ownership and currency, and the reason I'm saying it is also legal. When you're talking about the currency side of the map, you need new regulation to support money and currency, and you see how Libra is being attacked, and how all the projects that are trying to take out a regulated stablecoin are having problems, while security tokens are relying on existing laws and existing regulation, and we've launched securities according to all regulation and traded them 2 years ago. So the security, the regulation on ownership is here, it's done, we can tokenize it today, and we've tokenized it before, and now the problem is now the challenge is to build an institutional market. While currencies is still, a big problem in terms of regulation, it will take some time to solve. So these are two separate items for me.
What I like about this panel, we did another panel about 6 months ago. It was with primary issuance platform of the securities token market. And I think that the question that came up with all those amazing people with the issue, and you were the founder of one of those issuance platforms, was what are you going to do after those token are issued? Where they're going to be traded? And here we are, 6 months into the future. We're sitting with, 3 amazing people that creating and having an exchange and a secondary market, and a person who builds the infrastructure for institutional to come on board. So it looks to me like it's a wonderful opportunity. I would like to learn from you, Graham. I understand you're still applying for a license in Britain. Can you tell us, do you feel that the regulator is hugging you? Do you feel that it's difficult?
Sure. So I guess we're fortunate in the UK anyway that we've got quite a deep, vast financial services knowledge base, and that shows in the regulator, and they've released thought papers on where they see cryptocurrencies, digital assets across the variety of groups. And in the area we're dealing, which is regulated securities, they've made their thoughts pretty clear. They regulate securities, that's within their perimeter, and they're technology agnostic. Now, through the process of becoming approved, they still ask the right questions around the technology. It doesn't mean that they ignore it completely, and then they kind of consider where regulation applies and where it doesn't apply. But for the most part, and to Marlene's point earlier, if you're operating in a regulated security world, then you need to follow the regulations. But in the UK as well, you know, we're a financial services hub, we're a fintech hub. If you go through the hard yards of getting regulated, then out the other side of it, you're regulated by the FCA, and that's a stamp of regulation that you can't always get in all the jurisdictions. Yeah. Just touching on something that was discussed just now as well, because I think it's quite interesting around the adoption of crypto. You know, really, when you talk about being able to trade a security token to buy a coffee, you know, whether I agree with that principle or not, really what happens is the same as if you go into a supermarket in another country. All that's happening is an FX transaction is happening at the point of sale. So, you know, people use, I think, BitPay and others like that to accept Bitcoin at point of sale, but they're not really taking the Bitcoin and sitting on their balance sheet. Starbucks aren't going to do this deal with Bakkt or anyone else and sit there with 100 different tokens on their balance sheet and take that risk. All they're doing is flipping it into currency. So when we talk about shops adopting the acceptance of these currencies, kind of make no mistake that what they're really doing is flipping that to fiat, because that's what all of their costs are in. That's how to run an efficient business. Now, in the long term, obviously, it would be great if people were happy to have crypto as their base currency, but you can accept anything at the point of sale if it's within the regulatory perimeter and if you can convert it.
Agree. So I would like to have this final question for all of you. I'm happy if you can share your view about how would the security token market look in 3 and even 5 years. What are the assets that's going to be tokenized, and what is the misconception that we have right now about security token that is going to be, we're going to reveal that it's actually not what we think. So yeah, I know it's a bit of a complicated question, but hopefully you can help us and with your point of view into the future.
So I think that we already know what the pieces are, so hopefully we can build them within the next 3 years. But what I expect will be in 3 years is we'll be in a position where any asset owner that will want to digitize their securities will have an infrastructure where they can choose who they want to digitize with, which network they want to be on, where they want to list, which secondary they want to list, which fiat or digital currency they want to accept in order for their securities, and all of it will be almost mechanized to the point where if you have 1,000 nodes that are actually bringing assets into the market, and each one of them is bringing 5 assets a month, you will have 5,000 new assets every month. And then you do the math. A year later, you have a multi-trillion-dollar business.
Wonderful. Graham?
I think you know, in the next 3 years, you'll see a lot of the infrastructure pieces come together. You'll see a lot of collaboration with people in the space as it moves towards adoption, and probably we'll get to the point where issuances start happening regularly as digital securities. And I think that through the liquidity chain, through to the large blue chips as well. In 5 years' time, I think people won't be talking about digital securities. It will just be securities. And you know, and in the 5 to 10 years' time, I suspect everyone will own digital securities. But remember that one of the biggest misconceptions that we believe isn't that it just happens at that liquid end of the spectrum. So when I'm trading my pension in Hargreaves Lansdowne, it may look like I'm trading traditional securities, but all of those, their ownership registers will be housed on a blockchain at the CSD. So fundamentally, that's a digital security.
Well.
I think we have to look at the digitization of physical assets, so it makes it easier for people to add them to their portfolio on a platform like Hargreaves or eToro, so that, you know, you've got your gold, you've got your debt-based instruments, you've got your ETFs, and there's a pool of physical assets which you usually wouldn't have had in the same portfolio. You would have kept a record of them somewhere else, and you can say, well, I've just bought some property, I've bought some wine, and it forms part of your overall portfolio.
Is it real estate, arts? Everything's going to be tokenized?
Is it realistic? Is real
estate and art.
Yeah, real estate and art, yes.
Yeah, okay. Marlene?
I like to talk in examples, like what we can really expect. In 3 years from now, I think the majority of the ETFs will be tokenized. I can be quite sure about that. Now we're talking about actually publicly listed ETFs. In 3 years from now, we will be selling the equity in our houses. In 3 years from now, we can do IPOs on cars. In 3 years from now, we can exploit our rooftops and IPO them. What happens in 5 years, is actually a lot more interesting. In 5 years, I think the whole capital market is basically digitized or tokenized, I should say. Because it will take, if you look on average to get the permits that we have, it takes about three years to get them. Add a couple of 2 more years on it, and okay, then on the safe side, in 5 years' time, all the larger crypto markets will have exchange permits, which means that we then can trade and move these assets around between different venues, and then it becomes really interesting, and then we will start paying our coffees with our zero coupon bonds. So that's my expectation.
Wonderful. Do we have time for 2 questions from the crowd? Organizers? 1 question. Okay.
From an institutional level, what do you think is the one thing you needs to be communicated to them so that there is more buy-in from them to say, yes, I don't want to be here allocating 1 to 2% of my AUM into this thing called crypto, but getting it to 10 to 15% of the AUM allocated into these assets. So from, whether it's VC funds, private, families, what do you think is the one thing from each of you they would need to hear and say, okay, it's changing now and we need to make a move?
So actually, I'm completely separating crypto from digital securities. With digital securities, I can tell you what I'm seeing is the most successful strategy now. The most successful strategy that I'm seeing now is going to the institutional investors and saying, here's the asset. You can have a security the old way, we can give you some papers and then you're stuck with it, or you can have the digital version of the same exact thing and it has these extra advantages. Other than that, that's a security, and this security is just the digital version of it. And the word blockchain is not mentioned, the word security token is not mentioned, the word crypto is not mentioned. It's just, here's a digital version of the security that is just easier to manage. You're never going to lose it. It's paperless. You can sell a fractional portion of it when you want to. It will be traded on so-and-so exchanges if you want to. So all of these great advantages are in the digital version. When we can just say to people, exactly like Graham said before, now we have securities, and then we will have digital securities, and then we'll go back to just being securities.
So thank you members of the panel, and this panel is concluded.
Thanks.